So it's 2026. Uh, the first month of 2026 is almost over, which is, time flies actually. Time flies like crazy. Um, but yeah, it's 2026, and I just had this question, which is why I pressed record for this video. And I thought this would be a great way to kind of visually see, based on the numbers, if starting a long term account in 2026, when the stock market is at all time highs, when there isn't a lot of stocks that are on discount right now, is it a good idea? Right? Is it a good idea if I start with $1,000? How much money per month do I have to put into this long term account to get it to $1 million? And how much would I have by retirement? Right? That's kind of where my thought process went. And I thought, well, I kind of have a rough estimate of how much I would have to put per month, but I want to get the actual answer. And what I'm going to do is I'm going to kind of answer these questions with you guys as I do this video. So it's not scripted. There's going to be a lot of trial and error in this video, but stay with me. Let's get straight into it. So, what I did is in 2024, I started a dividend growth portfolio for uh, my Discord and my members. And the purpose of that account was to see if I could replicate my main account, but do it better. And whatever stock I bought, whatever trade I took, I decided to put all of those alerts into my Discord. So what I'm going to show you is exactly that. For context, so this is where you have my Discord room. And yeah, in the long-term account channel, I posted every single trade I took on this long-term account, which I started on February of 2024, and then I decided to start buying on April of 2024. And you can see that it started with 1,000, put in some money in there, and then yeah, started depositing. So the goal was bi-weekly to deposit 100. So per month it would be $200, right? Which I brought it down. Now bi-weekly I put in only $50. So per month I'm putting in 100, and it's automatic recurring, and I do it on M1 Finance, which is visually a lot easier to do a long-term portfolio and manage a long-term portfolio, and so on and so forth. You can check it out yourself. I don't even know if they have a referral code. If they do, maybe I'll put one in the description, but I don't know if they have it. I haven't checked. But at this point, what I did is I bought around 10 stocks, and I put in $100, roughly, like, depending on which I was very confident on. I put some money on those more, and some less, and so on. And as I had more and more cash available, I added more and more position on it. And throughout 2024, account did pretty well. Then 2025 came, account did even better. And as it was happening, one of my biggest purchases was Google. I bought Google for 100 and what is it, like $60? No, 70, I think. I could be wrong actually. Let me quickly check what my price for Google was. So this is the account. I'll show you exactly what this is. My average is 179. Okay, so I bought it at 170, and then I averaged up. So I bought more on Google because I believed that Google was going to do very well, and it was extremely cheap. And all of that, obviously, I talked about why and gave my reasons, and why I bought more. I gave it a $250 price target in 5 years, and obviously that blew past my price target. So yeah, it's way past that. Google exploded this year, and at the time that I was looking at it, which was May or was it June? No, it's May of 2025. The forward PE on the S&P 500 was 23, and Google had a forward PE of 19. So it was like Google was extremely cheap for the amount of potential it had. And to me, it was like, yeah, this is a no brainer. I'm going to go ahead and keep holding it. And yeah, Google has become my most gained stock so far. Now, the point is that I am trying to make is the whole purpose of this account was to buy stocks that pay good dividends, but also stocks that grow over time and are recession proof, have good fundamentals, have a good business model, and they're just all around good stocks to hold, and they pay dividends. So that whatever dividends I get from these stocks, I'm going to put that back into these stocks and snowball it, compound interest, right? Compound it over time to a point where I can live off of the dividends myself. That's the goal, essentially. And so far, what is it? I started this on February. So, right? Yes, I put in around like February 5th, I put in 1,000, and then I started putting some money into it, and then I started alerting it, and then bam, 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 and I started putting, like, right here. You see a big jump of 2,000. That was when I deposited $2,000 because the market dipped, and I was like, this is when I want to buy Google. So yeah, I was like, this is perfect time to buy Google. I bought $2,000 worth of Google here, and then I started nibbling some more Google, and then yeah, it kind of just snowballed from there. So the account is doing amazing. We're up 63.65% in 2 years, $3,000 gain. I put in a total of about 8,000 and a total market gain of about 2,900. So it's pretty good. The extra $100 that you see over here, it says 3,000, is from dividends. So at about $98.56 in dividends. So overall, great performance from this account, and hopefully it continues to do so by the end of my retirement. Who knows? But I want to start a new 2026 account in when the market is at all-time highs, and I have a lot of questions that I want to answer using ChatGPT. Now, what I'm going to do is I'm going to take what I did with this account, and I'm going to use the metrics here to model and ask ChatGPT to answer some of the questions, like, for instance, how much money I have to put per month to get to $1 million before retirement. How much money will I have if I were to put, let's say, $100 per month, like I'm doing on this account? How much money would I have by retirement if I were to reinvest the dividends that I have back into this account? And the other thing I would want to know is how much dividend am I going to get at the age of 65, which is retirement age in the US? How much dividend would I have? How much dividend would I get from my portfolio um, at the age of 65, right? Is that amount really an amount that I can live off of? So all of those questions I want to get an answer to. So what I'm going to do is, obviously, I'm going to use the benchmarks from this account and kind of apply it to my to ChatGPT, and I want to ask it. So what I need from this is, I want to know how much I've made in 1 year. So in 1 year, the account went up 24.73%, which is really, really good. If in 2 years I'm up 63%, then I'm roughly averaging like 25 to 30% per year, which is actually really good. I think that beats the S&P 500. No, SPY. Let's see what SPY gained in just a year. SPY was up 14%, and I am beating it. Wow, I'm beating it by a lot, surprisingly. I wasn't expecting that one. I thought I would be close. I thought SPY did a lot better than that, but I guess not. What if I put in SP 500? The index. Oh, is SNP? I guess I have to put SNP 500. Do they not have S&P 500? Like, okay, well, anyways, SPY is fine. What about the Nasdaq? How well did the Nasdaq? I think Nasdaq did a little bit better, right? Yeah. Okay. Wow. Nasdaq did 17%, so a little bit better in terms of the year. Okay. Obviously, this is taking into account January 23rd of 2025. up until January 24 of 2026 or 23rd of 2026. So it's not quite exactly the year of 2025, but it's fine. Close enough. We'll just use the dividend yield that I have for my portfolio here and the percentage that I gained. I'll round it down to, let's say, 20%. And then we'll also use roughly 15% that the S&P 500 did as also another metric to see exactly how we fare. Vanguard, by the way, did really well, so that's very impressive. But yeah, let's go ask ChatGPT all of these questions. So, hey, ChatGPT, I want to start a portfolio in 2026 with $1,000. My dividend yield is equal to, I saw 1.25%, right? 1.25%. Yeah, dividend yield. No expense ratio. And my portfolio gained last year about 25%. So I'm going to round it down, forget the extra 4%, just being modest. Let's see even if I don't take the exact amount, how this would be. My yearly gain for 2025, it's not exactly that, but whatever, is 20%. Okay. How much money would I have to put per month to hit $1 million? So it's a 1 mil total value in my portfolio. How much money would I have by retirement age 65 years old? And then the other thing that I want to know is how much. Actually, I can ask that later. Let ChatGPT figure this much out. And I want to give it my age. So right now, my age, I am 28 years old. So let's see what happens. I want to see if this actually ends up being something crazy. Well, one thing I didn't do here is I didn't ask ChatGPT to think about the fact that I'm putting in. Okay, so it's assuming it. Okay, that's good. That's good. Okay, so I should have asked it, but basically it's assuming it anyway, so that's good. So let's say in 2026 I'm starting with 1,000. Retirement age is 65, so I got 37 years of time. If I'm gaining 20% per year, right, which obviously is a lot, to be honest, it's very rare, but I'm taking the models from the current account that I have. Dividend yield of 1.26. So my total annual gain is 21.25%. Okay, so that's how it's doing that. So let's see. Monthly investment needed to reach a mil by the age of 65. Assuming this from an initial 1,000, I don't understand math. Okay, I do understand math, but I'm not about to go deep into this. So even without adding a single dollar monthly, your 1,000 would already go past a mil by the age of 65. I don't have to put anything. So all I have to do is just reinvest my dividends, and I don't even have to put anything. Wait, that's crazy, no? Just reinvesting the dividends is all I need to do that. That's awesome. That is very, very interesting. I will change the metric to do what S&P did, but that's crazy. Okay, let's look at this. How much would you have at the age of 65 with no monthly contributions? Considerably, only 20%. I would have 1.45. With dividends reinvested, I would have 2.4. Ah, okay, that's actually really, really impressive though. But obviously, getting 20% per year for 37 years is absolutely no way. Like that's not happening. All right. 10% annually is what Buffett averages, which is which makes sense, right? So we are going to actually go for what is logically makes sense. So we're going to adjust this. If I take the 14% from the S&P 500, I could do that, but let's lower it down to just 10%. I want to see if with just 10%, what happens. Okay. Um, Actually, one question I want to ask, if I were to be able to do it 20%, how much dividend would I get? So how much dividend would I get at retirement with 2.4 mil? Let's see. 30,000 per year. That is pretty good. That is pretty good. So I'm getting 2,500 a month just for, doing that. And if I, let's say 65 is the goal, but let's say if I were to reinvest those dividends for another 5 years until 70, I probably snowball this account even further, like insanely. Let's say, what if I were to reinvest the divs for another 5 years by age 70? How much will my portfolio be, and how much dividends will I get? Let's see what this one does. I'm curious. And then we'll do the 10%. If I keep reinvesting for another 5 years, all of the dividends that I get, I'm going to have 6.3 million. And from that 6.3 million, I would be making $6,575 a month. Wow, that actually snowballs really hard, huh? That snowballs really hard. And that's assuming I don't take anything out until the age of 70. Yeah, that's pretty crazy. That is pretty crazy. But let's go into a more realistic route, right? Let's assume we gain average of 10% yearly on the account. Do the math. Let's see what this says. Let's see if with 10% how this one works out. Okay, because I have to actually ask it a better question. Let's do the math from the beginning. Total yearly return about 10% with dividend yield of 1.25%. Reinvest the dividends until retirement. How much will the portfolio be? Let's see what this one does. This is going to be interesting because if we're going by 10%, which is basically what the average return is, that an S&P does. Obviously, this year S&P had a much better year. My portfolio did way better, right? But let's see how just going just 10%, just to visually see if just 10%, which is very, very doable per year, will that be still as good as, as I think it will be. So here we go. Total annual return, including dividends reinvested, no additional monthly contribution, just the 1,000 compounding. No, I want to see how much I would have to put. So we'll fix this. Let's see. So by age 65, your portfolio would be approximately 35,900. Oh. 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 That's the reason it's so less is because I don't have any monthly contributions. That's why. Dividends are paid every year, reinvested. So my yearly dividends would be 450 and my monthly dividends would just be 35. Okay. So here's the thing. How much would I have to put per month to get to 1 mil on a 10% return per year with div 1.25? Let's see if this one corrects it now. Okay, so yeah, they fixed it. Compounding. Final to reach 1 million by the age of 65 with a 10% total return, including 1.25% dividends reinvested, starting from 1,000 at the age of 28. You need to invest approximately $210 per month, which actually surprisingly a lot less than I thought it would be. Wow, I actually expected it to be a lot more. I'm not gonna lie. That's very doable. That's actually incredibly doable. Wow, okay. And which means at retirement, I'll have 1 million and monthly I'll be making $1,000, which is pretty good. That's not bad. And obviously, that's assuming my dividend yield is 1.25%. I can make this 1,000 times better. I can get a dividend yield close to like 3% if I actually do go for like really, really good stocks. I can get the dividend yield up a whole lot. But that's not bad. That is actually not bad. I expected the monthly contributions to be a whole lot more than just $210, right? If I take into account this number, 14.37%, right? And let's say I want to ask this question again, but I want to do 14.37%, which is the S&P 500's gain for 1 year. How does this fare? What would be my monthly deposit? Whoa, that changes it by so much. Really? Wait, really? That changes it by a lot. Wait, that's insane, no? Because some years you're gonna have like 24%, like my last year, right? Some years you're gonna have maybe 8%. Some years you're gonna have, maybe even more, maybe 30%, maybe 40%, right? That's so less. That is way less than I actually expected. That just adding a few percentage of yearly gain changes the amount of money I'm going to put in per month. Wait, this is extremely doable. I think this is incredibly doable. Right? So, what if I were to take my 24.73% that I did last year, right? Ask the same question, but do 24.73? Yeah, 24.73%. And what I want to ask it is how much would I have to put per month to get 1 mil? It's going to say you don't have to put anything, right? By the age of retirement. But what I want to do is I want to ask how much would I have to put per month to get 1 mil on a 24.73%. I mean, it's going to say it's zero. I don't have to put anything. It's going to compound on its own. The question I want to ask actually is if I put in $100 per month starting at age 28, what age will I hit 1 mil in the portfolio? What will my portfolio be by retirement? How much dividends will I get at retirement? Okay. And 24% return yearly with a dividend yield of 1.25, which is a pretty modest dividend yield. I want to see if I were to actually keep investing $100, which I am doing at the current moment. So this account Whatever I'm doing right now, that's exactly the metric I just put in right here. I want to see what happens. Does that give me some crazy numbers? Right. Okay, okay. I was not expecting that. What? What? 47 million? There's no way I'm going to be able to do that. But wouldn't that be insane? Let's say by the age of 65, you put $100 and you're averaging, 15, 20, 30%, 15, 20, 25% a year, and just going back and forth. Like, even if it's half of this, even if it's one third of this, that's still ridiculous. Even if it's like just 5 mil, that's still ridiculous, right? Which is very doable, which is insanely doable. Your monthly is 50K. You're making somebody's salary per month, and your yearly is, that's crazy, by the way. That's insane. Okay, let's fix something here. If I were to do this, and let's answer this question again, right? Um, if I put the same thing, $100, but instead we take 10%, what happens? Realistically, 10%, right? 10%. I hit a mil at the age of 60, which is still so good. That is so good. Portfolio would be at retirement 1.5, 1.05. I'll be making 1,000, right? That's so good. And then if I redo this again, and I'm investing 100, by the way, I'm keeping one thing constant here, which is the 100 and the dividends. But I'm just going to put 100, which is exactly what I'm trying to do. And if I take into account 14, let's say 15%, I'm just going to round it up, 15% that the S&P 500 did, right? You can see that Vanguard did a lot better. But if I just do the 15%, I want to see how much that would be if I were to have a monthly $100 investment. I would hit the 1 million at age 51. Wow. Okay. That's great. That's really good, by the way. 2,300 is really good. That's really good. So basically what you can see, and I kind of answered my own question, which is, yeah, you should start investing as soon as possible, ASAP. And these numbers that I just did, right? You can do them yourselves. You can probably make it even better. But essentially, you can retire with a really, really, really good portfolio, even with the modest 10%, 15% yearly return. You can still retire really, really modestly. Like, you'll have like $2,300 a month for a single person. It's not bad. It's not that bad. You don't really need more than that, to be honest. Of course, depending on, if I actually fix this and put in adjust for inflation, yeah, that would change everything, right? Obviously, if I say adjust for inflation, the amount that you'll see here is going to be valued a lot less. But anyways, I'll let you guys worry about that on your own. But visually, I think we can kind of see that it is never too late to start a long-term account. And I think what I'm going to do is I am going to start a long-term account with 1,000. I'm going to invest $100 every month, and I'm going to do this probably starting February again. I'm going to do it on my M1 Finance account, and I'm going to open up a new dividend portfolio that I'll try to make it public. I'll do more videos on them. So the next video I'll probably do is going to be on like what stocks I'll buy for that portfolio, and then kind of use ChatGPT to curate a plan as to how much I'm going to make and how much dividends I'll have based on the stocks that I make. And by the end of retirement, how much I'll basically do what I did in this video, but with an actual new account, and see the progress of it slowly over time. I think that's going to be a really fun challenge. And yeah, we'll see if we can hit $1 million even earlier than, the age of 51, as this one is saying. Maybe we can hit it even before that. Maybe we can hit the $1 million mark on that portfolio by 35, 40. That would be insane. And maybe for this YouTube channel, whatever revenue I get, maybe I'll invest more of that money into the portfolio. We'll see what happens. But my one last point is, most of you who do a 9 to 5 job can take $100 out of your account per month and put it into an investing portfolio and invest whatever dividends you get back into that portfolio. And even if you don't hit $1 million by retirement, I'm sure you'll have a decent portfolio to work with. So, yeah, start the long term journey as soon as possible, because while it is boring and slow, and it's not like options trading, and it's not like day trading, it is still one of the best ways to make money. I'll see you guys on the next video. If you like this video, make sure to smash the like button and subscribe. And yeah, peace.